Welcome to TMS Insights. It's a new financial year, Ben, into July and well in July. So we're almost, I guess into that reporting season of August here, but we've had US reporting and it really gives us a bit of an opportunity to reflect on all of that. So we'll talk today about macro conditions and give a bit of sense of that. So overall, Ben, I mean, this has been quite an interesting period in the market, but all, at the top level, macro driven rather than company specific things, certainly in Australia.
Yeah, I mean, January and July are the two quietest times on the Aussie market from a company point of view. Most companies are in their blackout periods at the moment. They don't talk to the market until their results in February and August. So it really has been more what's going on in bond markets, what's going on in the Middle East, the bigger sort of things that we've been dealing with, feels like for a while now, causing the gyrations, and it's not so much individual stock stuff. It's which it will be next month.
It will be next month. So, and again, just on those macro things, I mean, it's moved a lot in a couple of weeks. So we've now seen the oil price bounce. It's fears back in a little way. We've seen the bond market sell off. Our 10 years gone well through 5% now, which we're very comfortable a fortnight ago on that. So that and the market has been hovering, I think, in the Australian sense. US is coming off after a pretty good run. It had a good quarter, The June quarter was a very good one for the US market.
And they also, I think it was last week, they had one of their lowest inflation prints that they've had in, I think it was in 3 or 4 years or something. So this, obviously there's fears that if Trump does go hard in Iran again and $100 oil is here for a while, that rears its head. But at the moment, it has taken the pressure off the Federal Reserve to do anything with rates. The US economy seems to be charging along because we are again in the quarterly earnings season.
And the earnings have been basically very good. Not everybody's hit their expected level, but overall and this is the piece we want people to understand is we will come to our reporting season first in a moment, but first let's look at the US. I mean, and that economy without a lot of inflation has got earnings growth for its companies overall. Australia has got a much bigger inflation problem. And it doesn't have the earnings growth.
Which isn't great.
And so we will talk and continue to talk to people about what we're seeing offshore generally. And this isn't a political comment, but the budget, which we dealt with in May, is still sort of being processed through the economy, isn't providing any change in that thematic. It's actually accelerating the opportunity differential.
Yeah, absolutely. I think that is, in hindsight, that has had a bigger impact than I think we've ever seen a budget probably have on markets.
Absolutely.
Certainly on the housing market.
Yes, it's been profound.
So look, it's if we look at the US, I think it's still early days in their earnings season. So we had Google and Tesla both reported this morning, and we've had typically the banks lead the reporting cycle there,
and they were very good. The investment banks are reporting very high levels,
and that's been the difference. I think is it's actually been more the Main Street exposed businesses that have had the better results and the better share price reactions. We've seen great results out of, say, the semiconductor stocks that have come through, but the share prices have actually materially fallen. And that's been...
And that can be short term. That's a reactionary thing sometimes.
And they've been flying. So they were due, absolutely due for a decent correction. And
big tech, Google did fall after its result, and Tesla fell a lot. And look, the concerns there are CapEx, aren't they? And there's a lot of money going into build out the AI boom, which you can only know as something transformative to the global economy and global markets, but there's a price to be paid to get there.
I mean, Google last night reported its first ever, since it's been listed, negative quarter of operating cash flow. And that was purely because the amount of money that it's invested in AI. And this is the $1 million question is when all of the analysts are asking these CEOs, what returns do you think you're going to generate? They are still being completely matter of fact in saying we're not sure.
Yeah, some are very, very bullish and say that, but they can't quantify it.
No.
And it is hard, but they can almost not afford not to participate.
They have to. They have to participate, and some are saying, last night this morning we heard we are starting to see the returns coming through.
Yeah.
It's early days,
and I think you want to be bullish on the thematic. You don't have to be bullish on every stock and its outlook, but it's why we don't want a one-way bet on AI. And the winners will be, to your point about breadth.
Yep.
Those investment banks are going to be winners.
Yeah.
And a lot of Main Street companies will be winners. So when we talk offshore markets, we're not just thinking US. Although there's been a very good return environment over a period of time there. And we're not just thinking tech in the US. So let's talk Europe, let's talk Asia. You've been to Europe recently. And Asia's in focus. Some of the best performing markets have been out of Asia. And talk non-tech in the US. So rounding those sort of things out to give people a sense of the opportunity set is really enormous.
And I think that for us internally, that's something we've been spending a bit of time on, and probably in that second half review cycle, we'll be talking to clients more about it. Is trying to build out global exposure that's not super concentrated into Mag 7 or semiconductors, because we already do have decent exposure to that, it's not probably continuing to add to it, because we do think that if you sort of assume, which most people would say we are, year 3 into a minimum decade-long AI revolution and probably multi-decade, logically the next step that should happen is that companies that have been investing AI and are incorporating into their businesses will start to see productivity benefits and profit benefits. And those companies are probably the less exciting companies, in fact. And, Macquarie, we'll talk about Macquarie.
Let's talk about Macquarie.
You look at their result, like one of the highlights of their result, great revenue growth, all 3 businesses firing for the first time in ages, great cost management.
There's always been an apology in one of those groups in the last 5 years, so that was great. And so they've got a rigorous focus on costs, and
AI will be helping that.
In many ways, like there's the getting this is the productivity win we've needed, because we're not generating it here. This economy has lost gains on productivity over the last decade. AI has the opportunity to reverse that. So you don't have to be big tech to make really material steps forward with those the right tools and the right set for your business. Talking Macquarie, change of leadership, Shemara stepping down, Greg Ward, the new CEO.
A bit of a surprise in terms of the timing. We're sort of thinking this is probably a year or two out, but as good leaders do, they go out when they're on top. And if you looked at that trading update yesterday, it was the best we have seen, I think, in 3 or 4 years at the AGM. Just to give you some numbers on her leadership, she's been there for 8 years now. The total shareholder return over that time has been 193%. That's almost double the ASX 200's return. So that's an incredibly good result. I think if you fast forward another 10 years or 8 years, there's no reason to think that's not going to happen again. And I'd say it still remains one of our top holdings.
Certainly very different to the banks of a retail banking nature that we know here, because they're very exposed to housing. Housing is the issue that we brought at the front. About what we're concerned about here is obviously prices have slowed, listings have slowed, and confidence has ebbed, hasn't it? So.
Well, my view on the housing moment at the moment is that we're actually in a period of price discovery. I think everyone is now trying to work out what a house in Manly or a apartment in Bankstown or a house in Tasmania is now worth, given the tax changes, which are massive, that have been introduced.
And the answer is they're worth different depending on what sort of player you are, whether you're a buyer or an investor or what age.
It's going to be different in different areas.
Right.
But, there is evidence that one leads on to the setting of a price of another. So you can see that, auction volumes, listing volumes have fallen through the floor, which it just points to everyone's sitting on their hands trying to understand what things are worth. And, I think it's going to be a year or two that it'll take before confidence really properly returns and we start to see where things are, and maybe the rate of growth going forward isn't quite what it was for the last decade in the Australian housing market.
No, and many would be happy with that, of course, and there's some benefit, but it has a macro effect.
Yep.
There's a definite wealth effect that is associated there, and at a time when potentially immigration will slow, and that's kept the economy bubbling along in the last 5 years.
And the housing market.
And the housing market's going. So there are risks to the local economy. No point overstating them, just being aware of them and playing that out to where we invest and that offshore case again. So just being aware that when we're actually really exposed in that regard. Australia's not used to that. We've survived for 3.5 decades without any material pullback. So
if you look over the last 2 decades at the best performing markets globally, they all have the fastest rate of population growth.
Yeah.
It's an undeniable wealth multiplier.
Yeah.
And so not, the rate of population growth is going to drop off a cliff, but it feels like it's going to slow.
So taking that a step further to talk about our Aussie companies, as we will next update everybody in August for reporting season, where we do our typical 2 insights videos. What are we going to see, Ben? I mean, there is earnings growth in Australia, or there is expected earnings growth, but it's not uniform across the board.
No. So, look, if you look at consensus numbers at the moment, the market's expecting 11% earnings growth for the ASX 200, which sounds high.
It sounds very high.
And it is, because resource companies will do the vast majority of that because metals prices were high last financial year and cost bases were worked on, so profitability is going to be great in the resource space. But if you strip out resource stocks, we're probably looking somewhere between 3 and 5% earnings growth for the rest of the market. And the analysts reckon that about 2/3 of that earnings growth is being generated by cost cutting, not by revenue growth.
Yeah.
So, I sort of feel like sound like we're beating up on Australia here, which we don't want to sound like we are.
Proud patriots, but like this is investment capital, and it's
you've got to
following returns. Yeah, that's what we're after. So we have to be, understanding that there's better return
profiles
available elsewhere.
Yeah.
So, but that'll be, and again, this is not a uniform thing, and there are individual stock and sector opportunities, like resources and others. So it's
and there's a lot of global companies, as we saw with Macquarie yesterday, which are
Australian companies with global. Yeah, that's right.
Australian companies with global that are seeing these conditions. They're just listed on the ASX.
That's right. Yeah, which is good. Well, just in terms of next changes. What are you seeing? And tell us, you've just been in Europe. What's going on? What do you see over there?
Yeah. So, I mean, only fairly briefly in a small part of it, but, certainly travel is booming. I can tell you that much. Airports are absolutely full to the brim. There's a lot of uncertainty with travel at the moment because of what's going on in the Middle East. But when you actually speak to people over there, many people sort of feel like Europe's actually starting to get their act together after definitely. A long period where there's been a malaise and there's more confidence in Europe. There's more countries wanting to join the EU. So apparently Albania will be the next country to go into the EU. And we've had a change of government in the UK in the last week as well. Right, sorry, change of Prime Minister.
Confidence for an important economy.
There actually feels like there is some confidence in the UK. I think that there's actually almost a bit more like self-determination and a bit more sense of optimism about what's going on. It's taken almost
2 years since the president's been there, and that reversion back across the Atlantic is a good thing for, I think, the global economy, rebalancing it a little bit. So, but that's, thanks for that. But that's, look, our insights today, again, reporting season, we'll have a mid-August and end of August insights for everybody, and we look forward to bringing you all that detail then.